Very warm good morning to one and all present here. The Indian finance increasingly vital role in the global financial landscape to assess their position in the global context. It is crucial to compare them with the markets in major economies like the US, China, and the Eurozone. By examining India's equities, debt, commodities, and foreign exchange markets in comparison to global counterparts, we gain insight into both the opportunities and areas for improvement, highlighting the country's evolving role as an attractive investment destination and a key player in the global finance. Today, we have a one-day national conference on the financial market in the global context, jointly organized by the Indian Accounting Association, the Research and PG Department of Commerce at St. Berchmans College and Mahatma Gandhi University. Now, I invite all the distinguished guests of honor to come up to the stage. Prayer is the key of the morning and the vault of the evening. Let me welcome the department choir for the prayer song.
ലോകം മുഴുവൻ സുഖം പകരാനായി സ്നേഹദീപമേ മിഴി തുറക്കുമോ ലോകം മുഴുവൻ സുഖം പകരാനായി സ്നേഹദീപമേ മിഴി തുറക്കുമോ വദന നിവാരണ വഴി തെളിക്കോ ലോകം മുഴുവൻ സുഖം പകരാനായി സ്നേഹദീപമേ മിഴി തുറക്കൂ പരീക്ഷണത്തിൻ ആഴ്വാൻ കടലിൽ ഞങ്ങൾ വീഴും ചിന്തി മിഴിനീർ പുഴയിൽ താഴും ശ്രുതിയായി നാദാനാഥ വഴി പിടിക്കൂ ലോകം മുഴുവൻ സുഖം പകരാൻ സ്നേഹദീപമേ മിഴി തുറക്കൂ
Now, let me welcome Professor Dr. Gabriel Simon Tatil, President, Indian Accounting Association, Kerala branch, for the welcome speech.
Good morning, one and all. The president of this inaugural session, Father Reggie, who is the principal of this great institution, Professor Kinnari Thakur, who is the keynote speaker and also going to set the ball rolling for this whole event. We have with us Dr. Biju T, Professor and Head of the Department of Commerce, University of Kerala, and the Secretary of the Indian Accounting Association Kerala branch. We have Dr. Sebastian, who is also the head of the Department of Commerce of this college. Other faculty members, researchers, the Vice Principal, and Dr. Sibi, who is from the Management Studies Department, researchers, and my dear friends. Uh, a good morning once again to all of you. Now, representing the Indian Accounting Association in two forms, at the outset, let me share my joy on being part of this event because I am the Vice President of the Indian Accounting Association at the national level, as well as the President of the state unit of the Kerala branch of the Indian Accounting Association. So before I move into the formal welcome, I thought I'll share my thoughts perhaps in three parts. One is a bit about the Indian Accounting Association, who or the professional body which is co-hosting this event. Second would be about the theme of our one day into the national conference, which is the financial market. And finally, about what researchers actually do with the output or the outcome from such workshops. Now, first, the Indian Accounting Association, as all of you perhaps might have heard a bit about, is a national level professional body which today has 61 branches across the country and it is nearing 10,000 members across the country. In Kerala, we have four branches. One is the Kerala branch, which is the oldest branch, but the oldest branch itself was started only in the year 2009. And then you have the Alapi branch, the Kozhikode branch, and very recently the Cochin branch. So we have four branches and we have around 800 members in Kerala. Across India, what this particular association is doing is we associate on themes relating to finance, accounting, and taxation. If you visit the website of the Indian Accounting Association, you will see that now we have model curriculums for accounting, for taxation, which has been prepared at a national level and it is put across for academicians to actually interact and have an interface on what happens in accounting. So this is one thing that they do, and across the country, we have workshops like this where you deal with issues in finance, financial market, accounting standards, and so on and so forth. In the Kerala branch, we had a, a, a workshop like this, which was for BCom students and which was jointly hosted by the Indian Accounting Association and the Institute of Chartered Accountants of India, the Trivandrum chapter. And that was a wonderful session where a chartered accountant was actually trying to look at interpreting financial statements. How do you read financial statements? So, these are the kind of programs that they do in addition to seminars and workshops. Every year we have an annual accounting talent search examination, and this is online. Students across the country can register for this. You have junior level and senior level based on undergraduates and postgraduates. And what is tested there is basically your proficiency in accounting. And they give certificates and cash awards. This year's date is already announced. Those who are interested, you can visit the site. It is called NATS examination, National Accounting Talent Search Examination. And it is something which adds value to your commerce program, specifically in accounting, when you're going for a job or when you're going for some interview if you say that we have this NAT score also with us. And yet another activity is we have a annual conference which is held every year in one part of the country, and we have people across the country coming to that center. Last year it was held in Trivandrum. This year it is coming on the 23rd and 24th at Calcutta, where researchers in finance, accounting, and also professionals like chartered accountants and cost accountants would converge there and present papers on themes of contemporary relevance. Yet another activity is we have a journal which is called the Indian Journal of Accounting, where we publish research articles relating to finance and accounting. So this is in brief what Indian Accounting Association is all about. So I welcome all of you, not just to the seminar, I also welcome you into this professional body and into the activities of the professional body throughout. Now, the second is what are we trying to deliberate? We are looking at this conference in terms of Indian financial market in the global context. So I'll just, most of you would be perhaps knowing certain things on which we are actually deliberating. In fact, if you look at our country, I'm quite sure that Professor Kinnari would be elaborating further on that. In terms of the global market, if you look at India, even when we are saying that now, not just now, now in terms of GDP, we are actually moving ahead. Even earlier, India had one of the most robust systems of regulations in the financial market. When you talk about banking by RBI, or when you talk about the capital market by SEBI, if you look at our system, we never had a kind of system which was driven by two market segments where you have the prime and subprime equally operating. Now, for those who are students, at least, I'll just put some light on that. If in India somebody has to operate in banking, somebody has to operate in mutual funds, somebody has to operate in insurance, there is a primary regulator, like for insurance IRDA, for banking RBI, for capital market stock exchanges SEBI. And you have to function as per the guidelines. We never had a system where we are saying that there was a parallel market. If at all there was a parallel market, it was something which we were saying that it is something like what we call the blade mafias. So they were doing private money lending, but it was not under the same market segment. The so-called developed nations, including US, say for instance, they had financial markets which was always having a subprime segment. Now, what is a subprime segment? Say, I'll just give an example. Suppose I go to a bank for a loan, and by virtue of my income or by virtue of my job, I do not have the eligibility for that loan. So the the person will say, where is your salary certificate? Where is your income proof? Where is your KYC? So I'm saying I don't have none of these things. If it is in India, you will not get loan from there. You can perhaps go to a private money lender, but not through the banking system because you do not meet the norms as prescribed by the regulator. The bank will say RBI is asking for KYC, you have to give your salary certificate, you will be eligible for loan, which is this time of your takeaway income, so on and so forth. But what was happening in US is the same bank will tell you that you are not eligible for this, but we have another counter across the counter within our system where you can go and take a loan. And the extent to which you are subprime, you're below prime, that means you do not meet the prime conditions, the interest will be high. Say, for instance, suppose a bank loan is given, housing loan is given for 7%. I'm saying that I don't have adequate security. So I become subprime. So one condition I don't meet. So that's okay. You go to that segment, we'll give you some loan, it will be 10%. Then I'm saying I don't have KYC. Then I'm saying you're subprime. So now your interest rate is 12, but still you will get money. Now this is what unfolded the subprime crisis, of which I think most of you will be aware. Now it is in this context when the subprime crisis had a global impact, we saw that the internal mechanisms of our country was reasonably good. Although we heard about Basel I and the risk related to that, we saw that India still had its, when you say statutory reserve, cash reserve ratios, it had its regulations, it had its systems in place. Even when you talk about the SEBI, no, it does not mean that there is no insider trading and everything is perfect. But what I'm trying to talk about is we had a system where the market was actually looked into. So this is where our financial market is in terms of the global context. I just wanted to tell you that let us appreciate, let us understand, and let us, with wisdom, accept the kind of regulations when it is for the common good. This is part one. The second important part refers to how integrated we are moving into. Integrated in the sense that, again, we have a number of learners there. I still remember my days where I started my BCom program by looking at segments. We used to say that the financial market is divided into money market and capital market. Money market is for short term funds. Capital market is for long term funds. Money market players are banks. Banks are again divided into agriculture credit, agriculture bank, export credit, Exim bank. Then capital market, you have primary, new issues. Then you have secondary, stock exchanges. Today, a market is getting so integrated with technology that with one account, with one platform, you can scale across all segments. I might be in SBI. SBI might have its own depository participant. SBI itself will have its insurance. SBI will have agriculture credit, foreign credit, agro credit. Everything will be under SBI. SBI has its insurance, its mutual fund, and all. So all operations are getting integrated, and we are moving to the context of having something like a financial supermarket. Now, these are certain things which we are seeing that is getting integrated in the backdrop of having something like fintech services and financial supermarkets where integrated services are coming into the context. And even regulators are finding it difficult how to actually regulate in this form. Say, for example, suppose a mutual fund is giving a particular service which is partly based on insurance. Who should regulate? Should it be IRDA or should it be SEBI? So the market is so fast growing, so is becoming so innovative in products. We were talking about equity, we were talking about index funds, we are talking about fund of funds, we are talking about exchange traded funds, we are talking about commodity market, we are talking about commodity based traded funds. So lots and lots. And then you're talking about masala bonds, this bond, that bond, all kinds of products are making it innovative. And it is in this context that we are looking at this seminar. We are trying to deliberate on how are we in terms of vis-a-vis what is happening globally. And we are trying to find out whether this connect is keeping us safe, is keeping us mature, is keeping us robust enough to stay relevant in this context. So let us look at this. Finally, I said part three, what should people like you and me do? We are talking about a research perspective. I might say that what I studied 40 years back does not have the same relevance today. This I can say in a seminar like this, with reasons, with facts and evidence, with supportive kind of things. And I would perhaps talk of a new format. I might have my own perception where I'm trying to say that a bank cannot be just a bank. I might have my own perception which would say that a bank perhaps is a wealth manager, it is a super financial supermarket. I might have my own context of how I establish the Indian financial market to be better or to be stronger or to be with some challenges vis-a-vis that of the global market. It is you people who have to do it in this context because I'm not reproducing what is there in the book. I'm looking at what is there in the books, and I also look outside what is there in the real world. That connect gets established in national seminars like this. That's why we are saying we would like to have research papers. It is just the literature and what is there outside. I'm looking at the literature, I'm looking at the movements outside, and I'm trying to relate it with the market. So that is what we are trying to do. Otherwise, it's just listening and saying that it is nice. Because in seminars, when we go, often I have had experiences of that kind. Like after the seminar, some scholars would come and meet me and they would tell us, Sir, your session was very good. So, and earlier also 3 months back, I attended it. So that was also very good. So then I immediately asked, then what happened after that? Nothing happened. It was very good to listen. So we want you to listen rather than see. We want you to observe rather than see, listen beyond hearing. So try to track these events. Even those students who are at the undergraduate or postgraduate level, we study many things which we might find a bit difficult to understand when you relate it to the outside world. So in terms of financial market, you will get some inputs from the speakers here, from the papers here. You try to relate it to what is actually being published, what is actually being seen in your economic times, in your business line, in NDTV Profit, in CNBC TV. Lots and lots of things are coming up. And there you understand how things are changing and how fast it will change in future. I cannot just start. I'm not at all teaching what I learned in the primary market 40 years back. We are not even teaching what was there as products maybe 4 years back, because those products have a different dimension today. The basic structure is the same, but the market products, the market innovations, the models are changing. It is moving into a technology based trading platform. It is getting integrated so much with financial modeling, AI, and so on, which we have to open our ears and mind very wide. Otherwise, we'll become obsolete. The other day, I was discussing this in a multidisciplinary, the relevance of multidisciplinary learning. And I was telling the people in commerce, you just look at who are the financial managers and the chief finance officers of different organizations, specifically the prominent organizations in the industry across. You will see most of them are engineers. They are not today from commerce and management. Suddenly, we are seeing engineering taking over this. The reason is these engineers learn the basic theories of accounting and finance, and they have the fintech with them. We know the fundamentals of the accounting, finance, and the financial market, but we do not have the technology. So we have to link up this and see how the market is becoming infused with technology, robust with technology, getting stronger day by day with technology in terms of innovative products. And for that, we have to also look at the global context. In many places where India, because I don't have time to dwell in detail on that, in many places, when you talk about capital market, when you talk about IPOs, when you talk about IPO, vetting of IPOs by the Institute of Chartered Accountants of India at different levels, India has professionalized itself. And that professionalized knowledge is so important for the growth of this. So I appeal to all the delegates here, keep your ears and eyes open in those changes, and you try and work on that. You will see sky is the limit for you in terms of a professional career. So with these few words, I enter into my task of welcoming all those who have gathered here on behalf of both St. Berchmans College as well as the Indian Accounting Association. The president of this meeting, is none other than our college, the college principal, the principal of this very great, old, mighty institution, which has established its repute across the country and even perhaps across the globe. That is Reverend Father Reggie. On behalf of Indian Accounting Association, on behalf of the host of this particular event, and all gathered here, I extend to you, Father, a very, very warm welcome. Now, Professor Kinnari Thakur, who traveled all the way from Mumbai, she is not just an academician, she is an academician as well as a professional. I was earlier referring to the Institute of Chartered Accountants of India. Professionals keep updating themselves in a very professional format, trying to look at accounts, finance, because at one point of time, accounts was just believed to be something where you record things the way it has happened. Transactions have taken place. You journalize, post, balance, prepare financial statements. Today, it is driven by standards. Today, it is driven by disclosure norms. Today, it is driven by interpretation and analysis. And again, keep your eyes open on the changes there. No longer an accountant or a finance expert can prevail merely by computation and reporting. That is taken care by technology. Today it is inference, judgment, interpretation, those skills. So on that, tons and tons of changes are happening. Professor Kinnari is a professional as well as an academician from Mumbai University who was very kind enough to accept our invitation, come down all the way from Mumbai to Cochin and from Cochin to Changanasheri to do this task of delivering both our inaugural part as well as she's going to deliver a special lecture invited talk immediately after this. I request all of you to take advantage of that and take advantage of her expertise in terms of her publications and future interactions as well. On behalf of Indian Accounting Association and SB College, Madam, I extend a very warm welcome to you. Now, in one slot, I extend a welcome to the Secretary, Indian Accounting Association, Professor Biju, Dr. Sebastian, all the faculty members, Dr. Sibi, who is a vice principal, all the delegates, the students, the learners. Warm welcome to all of you. I'm not just welcoming you to this event, I'm welcoming you to the new world of learning where lots and lots of things are happening. Try to make your career a happening career, a transforming career with the little inputs that you get. We might get drops from here and there, but it is these drops which will make a mighty ocean in your career. So I welcome all of you, all the dignitaries to this seminar. Professor Biju T, Mr. Sebastian, all the other faculty members, a warm welcome to you. I also take this opportunity to extend a warm welcome to all the chairs. We expected Professor Rajendra Kumar to be here, but because of certain reasons he could not come. Professor Joni Johnson from Mahatma Gandhi University will reach very soon. All the co-chairs, the rapporteurs, the comparers, those who did the invocation for us, those who are supporting in hosting this on behalf of SB College and the Indian Accounting Association. A warm welcome to all of you, and I hope that you will join in the deliberations and take best advantage of this. With these words of warm welcome, allow me to conclude. Thank you.
Thank you, sir. With profuse delight, we welcome you to the conference. Now, let me welcome a man who does not need an introduction, a person who is known among all of us for his wisdom and knowledge, and leads us with his steadfast and unwavering support. I would like to invite our principal, Reverend Father Reggie Picurian, to deliver the presidential address.
Dear and respected chief guest of this day, Professor Dr. Kennedy Thakur, Professor Dr. Simon Tuttle, Dean School of Management Studies, University of Kerala, and President of IAA Kerala branch, Professor Dr. Biju T, Head of the Department, Head of the Department of Commerce, Kerala University, and Secretary IAA Kerala branch, and Dr. Sebastian, HOD Department of Commerce, St. Berchmans College, our Vice Principal, Professor Dr. C.B. Joseph K., dignitaries and participants of this conference from different colleges and institutions in Kerala and from other states. First of all, good morning all. I take the privilege to thank in a special way Indian Accounting Association Kerala State Branch for initiating the national level conference on our campus. On behalf of St. Berchmans College family, I extend our gratitude to IAA executive to, to be elected our campus to host this conference even among the various prestigious institutions. So coming to my duty. Sorry. So coming to my duty, recently we witnessed an election which was so important for the whole world. That was the US presidential election. And Mr. Donald Trump's return to White House. And I just Googled what are the impacts of this return of Donald Trump's to Indian stock markets. So there will be change of policies and all these FDI and FPI policies. All things will be influencing our stock market. And I think this topic of this national conference is very contextual and relevant to our Indian financial market and in the global context. As we all know, India, as our Simon Tuttles has said, India is the fifth largest stock market in the world. But as of 2023, it is estimated that around 6% of India's population participates in the stock market, whereas other major countries, that means for in developed countries, which has lower population than India, has a great participation of people in stock market, and there are very many reasons. As we go through the reasons, there are educational factor, safety factors, as we are mostly a traditional community, and there are economic factor. Then our Simon Tuttles has said, that is technology factor. As a foreigner to this subject, I am from the department of languages. So as a foreigner to this context, our Simons have said that these engineers do a great role in stock markets and so on. This is the same thing that happen in languages also. That means in languages also, the engineers do a great role in technological improvement, especially in the field of languages. That means automation and other things and so on. That is the latest study on languages also. So as Professor Dr. Simon Tuttle said, these engineers also play great role in the way of technology updating, and they do a vital role in stock market also. And there are some psychological factor also. That means fears of loss, and mostly how people they are doing their, that means their safety factors. That means they mostly invest on gold or land. That type of investment is the key areas where how people do their investment. Actually, all these factors are a gap in between investors and stock market. India is considered to be the largest young population in the world. COVID pandemic was one of the great catastrophes we experienced ever, but on the other side, it produced certain economic progressions too. One of the examples is the increase in the number of account holders in the Indian population, especially youngsters of Indian citizens. That is, in 2020, it was 36 million, and in 2024 June, it is 160 million Indian youth. This tells that the proper awareness programs, workshops, seminars among youngsters will produce dramatic results in our stock market, especially investment habits of young population. I wish may this conference would be able to enlighten your faith and clear your doubts, strengthen your self-confidence, and take away your fears. I wish all the success to this conference. Thanking you all. I remain. Thank you.
Thank you, Father, for your words. Professor Dr. Kinnari Thakur, Dean and Head of the Department of Commerce in Mumbai University, can be described as a teacher of inspirational magnitude. Through her deep rooted academic knowledge and research skills, she made a mark of excellence in her field. She is well profound in her branch of studies and is the right person for the topic in discussion today. With extreme pleasure and delight, I welcome Professor Dr. Kinnari Thakur for the inaugural address.
A very good morning to everyone, honorable members on the dais, esteemed colleagues, distinguished guests, and dear students. It is an honor to stand before you today to discuss a subject of tremendous significance. We all know that Indian capital market has long way has been very instrumental in shaping the economy, especially shaping the entire way of functioning of Indian economy. And now, with the integration of technology, and as India emerges as one of the fastest growing economy, this financial market, the role of financial market is all the more important, not only for India as in specific in particular, but also at the global landscape. So today, when we all talk about financial markets in international and global market, there's one key word which we all think and which comes to our mind, that is foreign currency exchange rates. And as Reverend Father mentioned, that foreign currency exchange rate, if you see, all the most of the currencies are pegged at US dollars. Okay, when you compare Indian rupees vis-a-vis US dollars, all countries, majority of the countries, they are pegged as US dollars. So any event that takes place in US economy has impact and percolates not only at the currency level but also in the stock market. Last 2 days, if you are a close observer of, or even just listening to what is happening in the stock market in the last 2 days, the change in the pattern has been very positively welcomed by our Indian economy, so Indian stock market. And the camaraderie which is shared by the US leader and the Indian leaders, both, we are expecting that maybe in future India will have lot more to to take to as a takeaway when there are strategic partnerships and relationships which may come across in future. So today's theme, actually, since the elections and the change in the entire economic scenario, today's theme is not only very apt, but it is relevant, it is contemporary, and it is the need of the hour to discuss the role of financial markets, which what is the position of Indian economy in the global context. So I congratulate the institution and all the team members who have been instrumental in designing this theme and organizing this conference. And I am very happy to be associated in to be a part of this program. And surely there will be always a learning experience. I look upon Simon sir as a very intellectual personality whenever I meet him. So I always feel whenever we share talks, topics, and also it's always a learning experience for all of us whenever we attend these kind of programs. So I hope that this program, this conference, will have many takeaways at the end of the today at the end of the day. And my best wishes to each one of you, and hope that you take this topic uh, as a research topic, more than just understanding the context of India, but how this research can be done to frame different kind of policies. And these that learnings may help you in deciding maybe a topic or PhD topic, in case if you are a potential researcher. So all the best to all of you, and thank you sir for inviting me here. And I wish that we have a good exchange of thoughts and ideas over a period of time when the post this inauguration session, and during the time of the keynote speech. Thank you very much, each one of you.
Thank you, ma'am. Next, I would like to invite Professor Dr. Biju T, Secretary, Indian Accounting Association, Kerala branch, to deliver the felicitation.
Good morning, all of you. Very respected President of this meeting, Reverend Father Reggie P. Kurian, Principal, St. Berchmans College, respected Professor Dr. Kinneri Thakur, dear respected Dr. Gabriel Simon Tatil sir, Dr. Sebastian Case, very respected Vice Principal of this institution, and dear faculty members, research scholars, and my dear students. So we have, as Simon sir said, we set the ball rolling now, and we are in the process of discussion about one of the most pertinent topic in the area of finance. As the head of the Department of Commerce, University of Kerala, and as the Secretary of Indian Accounting Association, I just want to inform you that the Department of Commerce is actually housing the Indian Accounting Association of Kerala branch. So that is why we have hosted the 45th All India Accounting Conference in Trivandrum with the support of all the members of Indian Accounting Association in Kerala. Even your institution also extended a great support for organizing the 45th All India Accounting Conference, in which we have received almost 1,000 participants from all over India and internationally also. So thank you for that kind of a support extended by your team. I think our Anthony Joseph sir and team greatly supported that particular initiative. And in our department website, you can find a separate tab for the Indian Accounting Association Kerala branch, in which almost all the activities, even today's activity, is also hosted there. So you please visit that also and be part of the Kerala branch of Indian Accounting Association. Not only the Kerala branch, we have the Alpi branch here, and Ernakulam branch, and Calicut branch is also there. So our team is going to participate. More than 300 members from Kerala is going to participate the All India Accounting Conference, 46th All India Accounting Conference to be held in Calcutta. So it is one of the strongest branch in all over India. That is why we are privileged to be here as representatives of Indian Accounting Association, and to support St. Berchmans College for organizing this kind of seminar also. So I personally congratulate the team St. Berchmans College for selecting a very pertinent topic, and for your timely interventions for successfully organizing this seminar. And regarding this topic, almost our in the welcome address, our very respected Simon sir, as well as Madam Kinneri Thakur, your own principal, all have mentioned about the relevance of this topic. But as finance students, or the students of commerce and management, we have to know one thing. What is expected from a student of finance? Actually, we need to speak in the language of finance. We can speak in two ways, either in our own domain language or in a common sense language. What is happening nowadays? We all speak in common sense language rather than that of our domain language. That is why even after completing the post graduation and all, whenever you attend the interview and all, even for the basic concepts, you are not in a position to give the correct answer because the concepts are not clear to you people. So this kind of platforms, you have to make use of this kind of platforms to get all the concepts very clearly. Then only you will be able to speak in the domain language. So this kind of seminars or workshop, it's not just for pumping information. That is why Simon sir mentioned about the praising words from the part of the participants after each and every seminar, that you may say that your presentation is good, but what kind of takeaways there from each and every workshop? That is the relevant question. So this seminar partially sponsored by Indian Accounting Association, is not just for pumping information. It is actually for creating knowledge, and as sir always mentioned, and that knowledge should lead you to the world of wisdom also. So consider this as a platform for gaining some knowledge in the area of finance. And as finance students, may I ask you one question? Oh my God! As part of felicitation itself, if he is asking question, if he will be asked to take a session, it will be filled with questions. No, actually, what is the primary objective of financial management? It's a fundamental question, isn't it? What is the primary objective of financial management? Somebody may say that it will be profit maximization or wealth maximization. Is that so? Actually, now because of all these kind of disruptiveness, as father mentioned, the technology, and because of a lot of information and all, we are living in an information driven society in which actually the primary objective turns to be protecting the interest of all the stakeholders and lead the enterprises in a sustainable way. That turns to be the primary objective even for the financial manager. And we can see plenty of disruptive innovations in the area of finance. Some of them are already mentioned here. And our Reserve Bank has introduced a CBDC, Central Bank Digital Currency. And once I asked in my class about this central bank digital currency, and after just giving a small introduction about central bank digital currency, I just asked my students to differentiate the central bank digital currency with that of UPI interface, uh, or Google Pay, or something like that. But nobody was able to differentiate it in that way. That is the issue. Even for a finance student, what kind of an innovation which is happening in the field of finance, we are not aware of the basic fundamentals of all those aspects. So consider it as the platform which provides you ample opportunity to discuss about all these disruptions that are happening in a positive way in the area of finance. And we are discussing a most pertinent topic today. So reap the benefit out of this conference and wish you all the best and all success in conducting this program also. Once again, and I congratulate the teams and Berchmans for organizing this wonderfully. Thank you.
Thank you, sir, for sharing your insightful and encouraging words with us. As we near the conclusion of this inaugural session, it is the time to express our gratitude to those who have contributed to making this event a success. To deliver the vote of thanks, I invite Dr. Sebastian Case, Head of the Research and PG Commerce Department of St. Berchmans College.
Good morning to all. I feel truly honored to offer words of gratitude at the conclusion of this inaugural session of one-day national conference on Indian financial market in the global context, jointly organized by Indian Accounting Association Kerala branch and Research and PG Department of Commerce, SP College, Changanasheri. First of all, I would like to express my deepest gratitude to our chief guest of the day, Professor Dr. Kinnari Thakur, Professor and Head Department of Commerce, University of Mumbai, for her presence in this meeting and for delivering an inspiring and thought-provoking keynote address and inaugurating this meeting. Thank you, ma'am. Now, I would like to express my sincere thanks to our dear principal, Reverend Father Reggie P. Kurian, for his presence and the presidential address in this inaugural session. Thank you, Father. I would like to express my special thanks to our dear Gabriel Simon Tattilsa, President of the Indian Accounting Association and Dean, Faculty of Commerce, University of Kerala, for the warm welcome address and his constant support for the successful organizing of this event. Without his support, it will not be an easy task to organize such an event here. Thank you, sir. I would like to convey my sincere thanks to Professor Dr. Bichu T, Head of the Department of Commerce, University of Kerala, for his felicitation and support to make this event possible. Thank you, sir. Organizing an event of this scale is not an easy task with the support of many. I would like to mention some name at this time. The organizing secretary of this conference, the Reverend Father Dr. Tom Anthony, our dear Anthony sir, Dr. Anthony Joseph K, Dr. Arun Lawrence of Maribanis College, Redisa Maribanis College, all IAA members and office bearers of the Alapi branch, every member of my Department of Commerce, both aided and self-financing, for their dedication and support in organizing this event. Last, to my students and participants, both offline and online delegates who are attending this session, thank you for your participation and engagement in this session. Your presence has made this event truly vibrant and meaningful. Once again, a big thank you to each one of you for being part of this academic event. Wishing everyone a fruitful day. Thank you.
Thank you, sir. Here we conclude our inaugural ceremony. We will now take a tea break. Please join us for the next section at 11:15 a.m. right here. Thank you. Kindly reminder, those who have bought your presentation on pen drive, please do submit it at the registration counter. I repeat, those who have brought your presentation on pen drive, please do submit it at the registration counter.
Once again, a warm good morning to all. I feel extremely glad to welcome Professor Dr. Chinneri Thakur to deliver an invited talk on the topic Indian financial market in the global context. Our speaker has been well introduced by Professor Simon Gabriel Thattil in this inaugural section. More than that, I wanted to mention some specific areas of our speaker in this welcome speech. Our speaker has a distinguished career in accounting and financial management. She has authored so many books in the area of accounting as well as financial management, and she has published several articles in the international journals as well as the national business journals. For 27 years, she has been working at Mumbai University. Currently, she is serving as Dean and the head of the Department of Commerce and Management. As her profession tells, she has uh, keen interest in the financial management as well as the accounting. She has in-depth knowledge in accounting as well as the financial management. Because of that, her degrees belongs to these areas. She has obtained Master of Commerce and she has obtained other degrees as ACMA, CS, MBA, and other courses. She's she's an approved grade in Mumbai University, and she's one of the NAC peer team member in the UGC team. Recently, she has visited Kerala as part of the NAC visit in the Maharajas College, and she is well familiar in Kerala, especially in Kerala University. She has chaired a lot of uh, open defenses. Even though she is in the peak of knowledge, I noticed one thing: she is very humble, and more than that, she is very devotee. Even in the morning, she has visited some temples to get the courage to deliver this talk in this section. I'm very happy to welcome Madam to this section, as well as our college, on behalf of Indian Accounting Association, as well as the St. Berchmans College. Most welcome to this, Madam. The moderator of this section is uh, Professor Dr. Gabriel Simon Tattil. I don't want to say anything about Simon Sir. Simon Sir is very well known, all of us. He is a thought bank in commerce, I think. He has expertise in all the subjects in commerce. Give, Even if we give any topic related to commerce, it's ready to deliver a plenty of informations before us. We have seen his knowledge in the area of today's topic in his welcome speech. Simon sir is always ready to help us in every area. Even he is helping research scholars, students, different colleges in Kerala as well as the national level. Was actually yesterday and the previous day in Goa University. He took a lot of pain to come to attend today's meeting. His flight was cancelled at the time, I think at 4 o'clock yesterday in the evening. Actually, he will be arrived. He would be arrived in Trivandrum before 8 o'clock, but unfortunately, he arrived in the Trivandrum today early morning. Even if he has tight schedule, he took pain to come to attend this meeting and to make this meeting a grand success. Simon sir is very friendly to this college. It is because that he belongs to our governing body, academic council, board of studies, and other areas of the college academic level. So I am very happy to welcome dear and respected Simon sir to moderate this section. We are honored to have a distinguished group of commerce and management faculties, research scholars, postgraduate students to attend this seminar. I cordially welcome all of you to this section and to make fruitful and to have a plenty of knowledge from the Kinneri Madam. Once again, I welcome all of you, and I am just handing over to this section in the hands of Kinneri Madam.
Thank you, Father. We also welcome you to the session. Next, I would like to invite Kinere Thakur for the session. I encourage everyone to actively participate and make the session a truly valuable and enriching experience for all.
So, very good morning to each one of you once again. And as I see, there are most of the participants here are research scholars and students. So I'll also start with some of the basic things related to financial markets, and then later on, maybe how the financial market, especially in the current scenario, how what is going to be the India's position in the global context, and integration of technology across all the domain is one of the most important development which has taken place, especially after pandemic. So, how artificial intelligence will also be an enabler in ensuring that we have more opportunities to understand and to participate across the entire system of the across the financial system. So I think in this way I will try to make the exchange my thoughts related to financial market. So let's start with the uh, Indian the context of global capital market. What is the India's opportunity in the global capital market? As we all know that since last 2 days we have lot of upheaval which is taken place in the stock market, and because of the change in the leadership we are expecting that maybe India may have more opportunity, especially if you see the percentage of duty which has been hiked for China's good imports. You know, India could be leveraging in many aspects if uh, properly planned and strategically designed, and within the framework if we plan to operate. So this also will be boosting our financial markets. So as sir was also mentioning that when we were a student we learned markets in terms segments, capital market, money market, but now everything is so integrated that it becomes very difficult for a regulator to identify, for any activity to be identified as who's going to regulate that particular transaction or activity which is taking place. So India at present, today, on this date, there is a complete change in the expectations and the role which India has, overall role which India will play in the upcoming years, post the US presidential elections. And uh, yesterday midnight also, you if you must have read the newspapers today, that there was a, in the Fed rate also. If I will not discuss that much now because it's becoming a different topic of discussion again altogether. So how we can leverage all this to the benefit of our economy, that becomes one of the most important factor which we need to understand while understanding the role financial India will play in the financial market at the global level. So India stands at the cusp of transformative era. With this burgeoning economy and strategic reforms, nation is poised to become a major player in the international capital markets. Uh, what is the India's economic growth and rising global influence? If you see the rapid GDP, uh, if you talk about 2020, let me tell you that when it was a pandemic period, we have curtailed our demand. In 2020, how many of you were actually going and buying things from outside? How many of you actually purchased goods? It was just on ordering from an online mode and basic necessity. How many of you went and saw movies? How many of you went and purchased different motor vehicles and all? Oh, we were not doing that. So 2020 was a year that time, and now the situation is completely different. So we had all the demands, and but the demand was just we were all waiting for an opportunity that the demand will be able to buy and will be able to satisfy the demand. So there was a pent up of the demand, meaning we accumulated all the demands at one point of time during the pandemic. But post pandemic, slowly and gradually, everybody went out, bought all the consumer durables, made all the purchases, everything. So the pent up demand has now exhausted. So now, even in terms of making investment in financial markets, you never went and took a housing loan during the period, not much car loan or housing loan during the period of 2020. But immediately after the pandemic period, there was a surge in going and maybe taking loans related to housing loans and car loans and all other different demands. So now the scenario is altogether different than what we have witnessed in the year 2020. So there are so many stages which we can actually observe. Subprime crisis, post that the regulatory body has become more active, and post pandemic, the entire scenario of purchasing consumer durables, interest rate, everything has gone has been a drastic and dramatic change in everything. So now, since the pent up demand has been exhausted, and in America, when during the regime, the first Trump 1.0, he emphasized on America first. Then India also, also made in India was the main, the tagline, which was more popularized. What was this all? This all was ensuring that you are actually intensifying production at home. You are intensifying that you should be self sufficient. Now in Trump 2.0 also the same thing. I think America first policy, if it is implemented, then you will see that lot of things which they are importing from outside, either there will be a hike, and then they are more encouraging domestic production. Wherever required, their domestic production will be enhanced. So now how India will be gaining, it becomes a question mark, and it becomes a real topic of study. It will not be a cakewalk for India as well, though we talk about good strategic partnership relationship which two countries leaders share, but still it is not going to be a cakewalk or a very clear opportunity for India. So in financial markets, as soon as there is a change in the policy of US, it will directly impact our currency exchange rate, and consequently it is going to impact our way in which we are our financial markets and stock markets respond to these kind of information. Normally all information, our stock markets absorbs all the information and responds very immediately. So how this how these responses is going to impact our global our market in India is one point which needs a very, very time serious understanding and interpretation. So you need to explore how this is going to happen. So it cannot be just in 1 hour or half an hour we can understand the entire way the impact India will have in the global context, because it's going to be a mixed reaction. It will be an opportunity. Unless we take the opportunity, it may not have it may not be beneficial for India. So how well we are able to leverage this opportunity, that is something which we all need to understand. And for that, post pandemic, the GDP at least almost 7% we are expecting. So the GDP has also grown at at a reasonably reasonable level. Rising global influence. You see, 10 years back, what was the India's position at the world map? And now, what is the India's position in the world map? If you see a consistent, a clear cut change in the India's. So, India is now an influencer. Globally, India's position is very strong. So, not only US, so many other countries' policies and all will also may have positive impact on India's financial markets. The economic reforms that are taking place, that is strategic policy changes which boost Indian competitiveness in the global economic landscape. We are open to more countries coming up and investing in India, though we have made in India at one point of time, but we are still opening more FDIs, more FIIs are coming and entering to the Indian market. All these, all in all, we have a very mixed response and mixed impact on the entire economy. So, what are the benefits which Indian system will have? There are We have a very youthful workforce. The median age, we have a demographic dividend, but at the same time, we have also seen that these demographic dividend, when it comes to higher studies, they are not mainly interested or intending to continue that in India. Most of them are interested in migrating. So that is also one point where we have to analyze that uh, our own resources which we have which we have nurtured, those resources are planning to go abroad, and then they are all these benefits which they have, the benefits which should be reaped in India is now actually going, and the benefits are going to the other country. But still we have proficiency in technology. Almost all the youth in our country has a very strong proficiency in technology. They are very receptive. So why India and US, we have share good relationship? One is technology is very fast growing in India, in US, and very fast we are adopting, we are accepting and adopting technology. So therefore also there is a point where a favorable term, where whatever technology is growing in the country, our country is accepting it. But we need to also understand that if we are intensifying protectionism, then this benefit which is percolating down, there can be a limitation in the benefit which is percolating down. So protectionism is something which we have to very carefully manage. Like full protectionism will not allow India to progress at a global level. We have a lot of people who are in India focusing on higher education. Though you see the percentage, higher education, the gross enrollment ratio technically is going down from what was there in the last year. But still, there are so many youth, young people, they want to pursue higher studies, and they want to go for education, especially in the IT sector and in all other sectors. So these are the strengths which will enable India to leverage more benefit in terms of any changes which is happening in the um, global market, uh, for our financial as well as non-financial, in the non-financial domain as well. Expanding middle income group and consumer demand. You see rising demands after opening up of the economy. You have a lot of income which you are spending, lot of income. Earlier in our times, and maybe 15 years back, I remember for seeing a movie, when we spend money, you used to feel that we have done a very good thing. But now almost every day you see people are going for movie, 500 rupees ticket, and they buy popcorn, and that is more than the ticket cost at times, so small. So all these incomes which there is a rise in the income, at the same time spending is also encouraged. So this all also can help in the circulation of the money in the economy. So rising income, growing disposable income, this fuel consumer spending across various sectors. Urbanization, rapid urbanization, that is also one factor that can the advantage of Indian market. Aspirational consumption, increased demand for luxury goods, services, that drives the economic growth. How many of the students here, at least in Mumbai, I don't know, we have a lot of thing while all the students, they want an iPhone, they are not happy with the Android phone. So how many of you student in school level only, they demand, very demanding, they all want an iPhone, and a very good you know pro this, that, the latest model. So this also has enabled, because of the aspirational consumption, this is also one important factor where India the growth, the circulation of the income is high, and this is one factor, one strength where we see that India will become a good beneficial, maybe leverage more in the other now when you want to buy uh, iPhone, and if you don't have, most of them in Mumbai, if you see, they are taking loans, they are buying iPhones, they are paying it in installments. So what is that, how this just buying an iPhone is benefiting whom? You are paying through EMI. So what is this? It's financial market. Finally, when you are paying EMI, it is interest rate, everything, so it is boosting the financial market. So more consumption, these all are the the reasons why the financial markets are also getting a boost, because you are spending more, to spend more, to take a car loan, to take a housing loan. Finally, you are going through the banks and the non-banking financial institutions for taking your for satisfying your aspirational consumption. Again, you are paying in EMI. You are using credit card. You are paying in EMI, and again, all that is a boost to the financial sector. So all in all, if you see, there are so many other small demands and small steps which we are taking, is directly or indirectly towards the financial markets and the financial sector, because interest rate plays a very important role here. So interest rate, how you are able to get an EMI, what is the interest rate you are paying, so all that factors, this is just step by step, identifying and analyzing the impact of financial markets at a global level. Step by step, first we have to understand what is the role, what is the play, what is happening in the economy first, at a different at a first level, and then we can understand that at a higher level how it is going to impact at a global market. So we have digital infrastructure, we have widespread internet connection, smartphone penetration, which is fueling the economy. Fintech revolution, innovative financial technologies transform banking and investment landscape. And we have this thriving startup culture which attracts global venture capital and foster innovation. In the previous decade, it was more about brown investment. Brown investment means you're already existing in companies, startups, everything, you're going to acquire that. But of late, maybe in this last 1 year onwards, we are talking more about green investments. What is green investment? Start from zero. So, startup. When you are going to, how you'll be able to start up? When you have financials, when you have, place where you can go and take loans, how conveniently you are able to get the loans. So, all these are players of the financial market. And that is why now in our country also, latest yesterday news also, you can say green investment was given more of focus. Our culture is of savings. In other countries you go, their culture is more of spending. Whatever you want, you spend. So saving culture also has a very indirect and direct impact on how the financial market will function. So high saving rate provides a robust capital base for investments. So whenever you go, you have, if banks are not giving you loans, there are other financial institutions which will do away with one or the other requirement, and then they will be providing you loan, not like subprime and subprime crisis, but there are certain requirements which they can do away and they can provide loan. So this also will have a boost in the capital market, because our culture of saving is in fact giving trust to the capital base which is required for the startup. So instead of brown investment, now we are talking more about green investment. Financial inclusion, government initiatives expand access to banking and investment products nationwide. 10 years back, the number of banks and the persons having bank accounts, and now the 2014 and 2024 data, if you compare, the number of persons included in the banking system, the financially included persons, they are more. But insurance penetration is very less. So there are so many financial products which still at this stage also we need to encourage more and more participation in terms of getting insurance policies and other usage of other financial products. So financial inclusion up to one level, for one particular parameter we have achieved. If we talk about number of bank account, that we have achieved. But financial inclusion is not only number of bank account. There are so many things, how you are trading, whether you are having knowledge of products which are offered, whether you are even if you have knowledge, are you participant of that product, are you buying insurance policies, house insurance, not only life insurance which gives a tax advantage, there are so many other insurance policies. So are you a member or a participator in these particular financial products? So all that financial all that is directly linked with the financial markets, because all these parameters play a very important role in determining the rates and how the entire progress of the financial market is taking away. Investor education, growing financial literacy drives informed investment decisions across the demographics. So earlier, with all these technology, we were not very well informed about how the financial markets are and the stock markets are moving ahead. But now just open a channel, so many channels, mobile, everybody will every the information is so quick and so fast that you are able to take so many decisions in a very short span. So this that becomes at it has an advantage, and also at the same time it may not be, it may have a disadvantage as well. So the resilience also is very gained momentum, so that you are responding to this information, the news which has come, and immediately you will see a fall or a rise in the stock prices, the bullish tear, the trend, and the bearish trend, everything you will be able to immediately, you will be able to see the difference once the information. Before election day only, I think, before the election results were declared, we see a surge, we saw a surge in our Indian stock market. And after election, immediately we saw Nifty, Sensex, everything had responded very positively. So news also, because of the technology and because of the quick information and spreading of news, we are having the benefit of using these news and information to our advantage for making very quick and very thoughtful decisions relating to financial markets and stock markets. So we have this different class. I think everybody knows about what are the different asset class, and how these asset class uh, have the potential and the risk level of the each asset class. So the government bonds, though the risk level is very low, the growth potential also. So lower the risk, lower the returns. That is the saying which is very popular amongst all the finance students. Regulatory reforms and evolving financial infrastructure. So liberalization of FDI policies has in a way helped to attract global capital inflows. Robust regulatory framework. Though after subprime crisis, we all have strengthened the regulatory framework, but India was, because of its stringent rules and regulatory, we were protected from all these crises. Still, there was not much loss for India because of the policies and the regulatory framework which they had. Integration of technology. There are advanced trading platforms and settlement systems that enhance market efficiency. So this all plays a very important role in strengthening the financial markets. India's competitiveness as an investment destination. Amongst Asia, India is now emerging as one of the fastest growing economy, and therefore we are able to attract more capital, and that is the reason why the benefits is percolated, and you see that compared to other Asian economies, India stands as a strong at a strong position. So, Gateway to Asia enhances its appeal to the global investors. So, if you connect green investments with the global capital inflows, that is related, okay? Because of the green investment strategy, which is more now into consideration, we have global investors and who are trying to put their money into India. Diverse sector opportunities from tech to manufacturing. India offers varied investment avenues across industries. Once upon a time, it happened that India was considered purely, first, we had India as an agricultural sector. Then, over certain years, we considered India as a manufacturing to some. Then, mostly it was service. So many years we were just assuming that India is a service sector economy. But again, after Made in India, you have both service sector economy. You have a very strong technological strengths, and now because of Made in India, there are so many products. If you see when you are buying that, and if you happen to see all the read everything, there are so many products purchased which will have manufactured in India under the Made in India project. So this also has all encouraged, and this has boosted the production of the financial markets and the production of the economy. Ease of doing business is one factor which has attracted more investment in India. Brownfield investment, I was telling you that they acquire or expand the existing business, but now we are into greenfield investments. There is a full half an hour to 1 hour session which we can have on greenfield investments at some other point of time, or maybe some of the other faculty can discuss more of what is a greenfield investment. You are building completely new physical assets, like you are building a new office, a new a new venture, a new startup. So this attracts more investment opportunities in our Indian market. Global financial stability. The financial regulatory reforms implemented since the global financial crisis have helped support global financial stability, because so many tight regulatory reforms and regulatory bodies are now in picture, and therefore we are at least keeping protecting ourselves from all the crisis. Though it was talked that like after 2020 that there'll be one more crisis, but India was resilient enough, and India did not have to face any of this. Across other countries we saw that there are some countries where there was a downtrend, but India was sufficiently protected from that kind of situation. Strengthen supervision and regulation, better crisis management preparedness, and resolution process. This is also very important. Resolution process, enhanced data collection, and a macro prudential approach to financial sector oversight have raised the financial sector's resilience to the multitude of shocks experienced in the recent years. We have enhanced data collection everywhere you go now. Data collection related to so many things. Whenever you want to go loan, or whenever go for loan, or you want to go for any other, what is the first question which everybody asks you for KYC? The first question which everybody asks you for your identity, knowing your identity. Aadhaar card. That's what we have seen in our any banks, anywhere you go, they will first ask you about the Aadhaar card, and then all the subsequent documents, PAN card, and all. And there are so many things. Without that, your banking sector, banking, loans, applications, and all, upfront reject. If you don't have that, it will be upfront reject. That is what we have been seeing in so many states in Maharashtra, Gujarat, Rajasthan, wherever I've been going and discussing with all this. So I don't know. I think in Kerala also it should be across all the states, because it's a union government's decision. So that is, they have a record, data collection. They have a record of everything. You just go to see what is your check, what is your credit score. You just there are so many sites now which is giving you free credit score, your credit score. So everything is available so easily on the click of a button, that very difficult, that this kind of crisis will happen. It's very difficult now, unless you really go something in a completely different direction, out of the way. So because of all these, because of the stringent rule and policies, we have actually protected from the other types of crisis which has happened, which was thought about in different countries. So what is the India's position? The evolving nature of financial sector landscape has positive implications for financial markets in India. The brown investments, the type of all these things which we discussed, the identification, data collection. There are so many positive aspects which is happening. So at a global level, if you see India's position, we have strengthened compared to what we were before. We have strengthened our position in the financial markets, and we may have lot more opportunities yet to come in future, in these another 3 to 4 years, because the if the decision of importing of putting cut or import duty, high import duty on Chinese products, I think India can be under the made in India. India can leverage its position. So in future, if we really work out in a very diplomatic way, I think we will be able to gain a lot of benefit for our country in terms of consumer durables, and which percolates down to the financial markets, interest rate, taking loans. When you decide for a green investment, you need to approach to banks and financial institutions. And what are the strengths? On the basis of that, you will get a favorable terms of rate of interest. So all this is very interrelated and interlinked, and therefore boosting the economy, first step is to boost the investment in the particular sector. So, market based finance and non bank credit intermediation have generated alternative sources of finance for firms. As we in the morning session, now there is not banks who are just giving loans. There are so many other financial institutions, and banks are again not the only insurance companies, not the only companies who are selling insurance policies. That is also done by bank and other institutions. So there is so many interconnectedness of the financial products, that it may be of an advantage for our economy. So we may have a greater market efficiency through capital markets activity, through private equity and private credit, hedge funds, and high frequency market making and trading. So the growth of NBFI strengthens the prospect of financial stability. And now, if you see the India's position, we can all say that because of all these growth, it is percolating in a positive direction, and we will see in future that India will have a very good and strengthened position vis-a-vis the global financial market. A broader set of financial intermediaries with different risk portfolios, time horizons, and expertise avoids reliance on banks, increases competition, and provides diversification to borrowers and investors, and creates mechanisms for risk. So how do we go about that? You have to improve the financial plumbing. If you are taking care of, then it will really be helpful for the country to to gain benefit out of the different financial system in the financial system. So, maintaining trust requires ensuring that financial transactions are safely completed even in the times of stress, and ensure that payments and settlement systems work effectively and securely. With the integration of technology, so many in the stock market also, after you sell, purchase, you see the settlement and the trading is done very smoothly. The settlement and trading which was there years back, and now you see this complete change in the trading and settlement which is happening after the integration of technology. So all in all, I can say that India, we foresee that India is going to strengthen its position more in future compared to what we have uh, in these last decade. More and more benefit in compared to the global financial market India is going to witness. And lastly, artificial intelligence. How artificial intelligence will be an enabler in the capital market. Artificial intelligence is something where you are going to get information. You just think of some search something. If you put some statement in Google search engine, next day onwards or next hour onwards, you start getting information about that particular, you getting pop up about that particular information which you have keyed in. So artificial intelligence functions so automatically. Even if you want to avoid that reading that, you tend to get all the information, and you should, and maybe that will enable and help you in making accidentally, though even accidentally, you may tend to read that, and it may help you in making good and informed decisions. So artificial intelligence and generative AI have a potential to dramatically transform capital markets through increased efficiency, automation, and analysis of the complex data. So artificial intelligence again is going to be an enabler for making good decisions, informed decisions, and it may completely transform how the entire system was functioning in the capital market. So this was the how the adoption. Though the artificial intelligence and machine learning is not new, it was there earlier, but now there are so many generative AI emerges that adoption in the capital market is still in the earlier stages. There are so many ways in which it is been informed. The information is sent to the consumer. So not that AI is just the latest technology. It was there earlier, but we did not have smartphones. We did not have sufficient infrastructures and devices which were instrumental in enabling these artificial information through artificial intelligence. So now, because of smartphones and because of these devices, we are able to reap the benefits of artificial intelligence. Actually, it is a concept which was earlier, not the concept of this century, 2020. It was 1990s. But now, since we have the infrastructure, the devices, and the smartphones, wallets, and everything, we are able to reap the benefits of that. In which stage, at what level the adoption of AI will be useful? Client profiling, asset allocation, it will enhance the optimization technique and dynamic multi period portfolio in security selection also artificial intelligence will be helping, and in trade execution. So these are the four areas where artificial intelligence is going to help an individual in making informed decision. You are uh, selecting a security, which security you have to select. Now the market has gone up last 2 days, and if you want to buy a security, how you are going to decide that? You are sitting in front of the stock market interface for hours and hours doing all the analysis. All this will be in a very short and a very quick uh, time. Very short time you will be able to make the right decision as to which security you will select. So that again, artificial intelligence is again going to help boost the capital market, because India is the leader in adapting adapting the technology and accepting the technology. And therefore India stands to gain more than any other country, because we are very quick and very smart, because of the demographic dividend, because of the techno savvy population, and because of the adaptiveness which we have. So these three also stands to gain India in terms of global financial markets. uh, Market structure and dynamics, more widespread use of AI driven trading technology algorithms. We may have novel strategies, faster price discovery, wherein the price reflect new information more rapidly. As soon as an information it is absorbed, but because of AI we may have much faster price discovery, and then there will be a high turnover, very increased trading activity and market liquidity. So lot many activities will be at a very greater pace, and the entire overall Indian financial market will see a very number of transactions, quick and increased in the number of transactions, a very high turnover in terms of the number of transactions and trading which is happening. So what are the potential benefits? We have enhanced risk management through AI. We have more enhanced risk management, deeper market liquidity, and improved market monitoring. All these three in combination will be to the advantage of India becoming more strong at a global level in terms of financial markets. So regulatory, I think we had discussed. And finally, uh, adoption of AI accelerates its potential to bring significant benefits through efficiency and sophisticated analysis. So, as you use AI, you have more sophisticated means of analysis of various, so how the entire stock market is functioning. You have more informed decisions which you can make. You have more turnover of the transactions, and your demand, which is there for consumer durables and all that, also indirectly will have an implication of the on the financial markets. So I think with this I will conclude, and thank you very much for giving the opportunity. So overall you see that India has a potential more to strengthen, and maybe we may become one of the leader in the financial market at a global level, because of lot of our strengths in terms of young population, techno savvy population, very quick swift adoption of technology, and a very intelligent way of using this technology to the advantage or to leverage the benefits. So all in all, if you see, we see a very good, and though there will be challenges which were there in all the other fields, but in spite despite all the challenges, we see India to be in a very strong position compared to the global other countries, compared to its Asian counterparts when it comes to the global financial markets. So thank you very much for the opportunity.
Thank you, ma'am. For the further proceedings of the section, I heartily invite Professor Dr. Gabriel Simon as to the dais.
Yeah, thank you, madam, for that wonderful presentation. All throughout, just to give a gist of what we were trying to look at, it was on the opportunity for India, looking at how we evolved in terms of the financial market. Now, if all of us know that Bombay Stock Exchange, if we talk about Bombay Stock Exchange, it's Asia's first stock exchange established in 1875. From 1875 to 2024 and perhaps 2047, the future, there is going to be a massive change. In between, we had NSE coming up in 90s, and we look at the volume, look at the product, look at the diversity, we have gone a long way. Now, Professor Kinnary in her presentation was trying to look at India's opportunity, first focusing on the social demographic factors. Like we have a demographic dividend, young population, consumption's going up, incomes rising, and that income supporting the financial market. Then she went on to look into factors like brown investment versus green investment, financial plumbing, also culture of savings, and finally, artificial intelligence and generative intelligence in the market. So, thank you, madam. Before we come into the discussion part of it, I would like just to throw some more light on it so that we make this more meaningful. India's opportunity is coming up in the global context, basically looking at finance and financial markets becoming an enabler. So that is what this whole presentation was. When we are saying that even the low income or the middle income group are being provided with finance through EMIs where they can buy, where they can consume, and where they can grow, where they can leverage from that. Now, all of you, I want your attention to this point. If you look at India, now anybody can buy anything on the street. You pay through the UPI interface. You can buy any FMCG. There is a means that you can pay in slots. You can buy any kind of products that come in the market even without having money because you can spend and then save rather than save and spend. So you have this kind of a system where finance is enabling all this. So if financial market becomes strong, your factors that govern the market is going to make many other things strong. Now today's capital market is talking about commodity markets. Capital market is talking about a separate segment for micro small enterprises. Capital market is talking about segments for startups and a new ecosystem for that. So investments are going to support many other things, and it has a crossroad kind of linkage. What is that linkage? Investment will support those who produce a washing machine, the producers of washing machine. The market will also support consumers and ask them to buy washing machines. Investments will support good healthcare, like good hospitals, multi-speciality hospitals, all kind of innovation in the production of medicine. And in the same financial market through health insurance will also promote the seekers of health products. Investors or investments in the market will support industrial production, and the same financial market will also support consumption. So, two-way we are trying to energize it. There are means through which you can support it. And again, financial market is not essentially in the industry alone. Keep that in mind. Financial market is having its impact almost everywhere. You can see it having its impact now everywhere, even in education. You have education loans, you have education support systems. It is supporting over there. Financial market is also supporting the ecosystem, which is in social domain, like direct benefit transfer, weaker section transfer, internship support for the students. So it is there everywhere. Now, that kind of an interface being present, the interface that we are talking about, this finance market becoming an enabler through technology support, and technology, as she rightly concluded, talking about artificial intelligence and generative intelligence taking it. On one side, you have neuro marketing trying to map. On the other side, you have finance trying to give. She already made a reference to the search that when you do a search, you get a lot of products and you promote that. When we look at the Kerala scenario, because she was talking about culture of savings, and more specifically in central Kerala, we are witnessing a shift in this. The Kerala concept was parents and grandparents will save, deposit in the bank, keep money for children, next generation. They will buy land, they will buy some construct houses, and they are keeping everything ready for the next generation. And suddenly now we are seeing that this next generation does not want it. This is one problem which we are now facing in the sense that they are all abroad. And when they come back here, the father or the mother will tell my son, you go and see there is a plot here, there is an agriculture land here, there is a flat, and the son is saying, I don't want to see that. So suddenly we have understood that it is not always savings. It's also spending and living with empowerment, which becomes more important than saving. Market is also moving on that line. So initially, we were having lots and lots of savings coming into just bank deposits. Now we are moving from that into ventures where we can actually spend effectively. So what I'm trying to pinpoint is when we are saying financial market in the global context, we have parameters which are talking about India being in the fifth position. That is in terms of your GDP, total production, and that is becoming very robust with your market. But per capita income is very important in terms of your population. We need to have an empowered population. And the shift is again coming there. Our population is getting empowered, but we need to have because 150, 140 plus crore, and they need to have money. And when they have money to buy, when they are empowered with that, again, the finance is acting as an enabler. So that is a change that we are going to have. That means we are going to increase penetration into the capital market, penetration through DP accounts, penetration through insurance, and all of them are going to use the financial market. And accordingly, production will move. So that is what we are trying to look at how robust it is. So ideas here are not exactly in tune with what is existing. Learning for students is that all business ideas need not initially have cash. Lots and lots of people are entering into startups and business ecosystems without having funds. What is important is having robust, feasible business ideas. You throw open this idea, you will see a market coming with funds. Now, that is what we are talking about: crowd financing, venture capital, risk financing. But you must convince the outside world that I have a feasible idea. A feasible idea without a feasible, robust financial market perhaps might not work. But now we have a techno driven financial market where that feasible idea can get financed. That is the concept that we are trying to evolve through when we are trying to look at it. So there is a long way in which we need to go. The emerging business models are not models that we initially thought of. When 40 years back, I was a student, our concept of learning is if I want to start a business, land, labor, capital, you have to buy land, construct building, purchase machinery, buy raw materials, do production, do assembling, do transportation, then you do sales, then you do after sales service. Everything one entity. Today, you look at any product manufactured, like your air conditioners or washing machines, somebody will be producing in one brand name. Different parts will be coming from different people. Somebody will do the assembling, somebody will do the servicing, some other party will be doing the packing and distribution, some other party will be doing the warehousing, some other party will be doing the after sale services. So in this emerging business model, financial market can support anybody in this entity. Somebody who's manufacturing a spare, somebody who is giving a service, somebody who is creating the content, somebody who is doing the after sale service. That financial market is a kind of change. So there is a big demand for funds, there is a big demand for consumption also. So two things here that is happening is one, there is, as Madam rightly said, from intermediation, we are moving into disintermediation. Intermediation is bank is in the middle. That means all those who have money will put their money into the bank. All those who need money will go to the bank. Today, there are other means also that somebody who is interested in a very good project. You saw Mr. Yusuf Ali, an entrepreneur from Kerala, who went for an IPO recently. Very, very big success. The time it opened, how much funds it created. He did not go to a bank. So this intermediation is happening. There are means through which you can go. There are alternate supplies which you can go. There is crowd financing which you can address. This requires a very robust system. So that is what I think we are trying to look at the opportunity. But what is the challenge? What is the other side of the story? The other side of the story are the divides which we still have, which we need to address. As I said, when we say GDP is high, per capita is not. We are fifth GDP. Where are we in per capita? We need to gallop still further. Where are we in terms of? We have made a big change in our depository participant DP accounts, but where are we in terms of global levels? Because we need more and more people to understand the philosophy of this enabling role of this finance, which is what we are trying to bring it. So thank you, madam, for your session and for the inputs. Uh, I have just, before I come to the audience, I will just ask you one issue, one question, because when we say AI, when we say GI, when we are saying that the culture of savings for India and all that, uh, India at times still looks like having a big gap, like something like some places, some parts of India, when I travel, suddenly it looks like we are still in the old Stone Age. Villages with not good roads, huts and all, people who are not literate on one side. And suddenly you move to some cities like your gift city, for instance, everything is high tech. Everybody is using technology, big buildings, modern facilities, multi speciality hospitals, everything on a high level, which actually talks about a divide. India still having this divide and all the demographic dividend that we have. What is the scope for the financial market? Do you still believe that it will grow at the present pace, or do we need to address the demographics and the social factors in a more rigorous form in order to see whether the financial system can be made more robust? Now, once Madam addresses this, she'll give her answer to this. I'll open myself to the audience. So, anything which you would like to share, discuss, ask, we'll come back to that. Thank you. Now, over to you, Madam.
Yes, sir. I think we need to address all these issues first because, to become more robust and to become, we are still emerging, and our strengths are still not, the full potential is still not explored. So I think improving the infrastructural at level where you can see a great divide between two different segments, I think that is very important first, and then I think that will percolate, and the benefits of the financial market and strengthening at the global level, I think we can take more benefits after we ensure that the last person also has has equal in availability of the infrastructure, smartphones, wi-fi facilities, and enough knowledge to decide and to penetrate different financial markets, be it securities, be it shares, insurance, everything. So first we need to educate everybody, and financially literacy, not only financial literacy, actually first literacy and then financial literacy, and then we can reap full benefits of this, uh, uh, being a young country and being a very adaptive and a receptive nation, and an emerging economy. So this is from my side, sir.
Yeah, thank you. Now, for the audience, we would have some those who are researchers, some who are working in the area of financial market, some who are actually have pondered through the literature on the growth and fall of the market. Some who would have looked into, in spite of India being reasonably regulated, India is falling to certain things which happen globally. Like say, for instance, when subprime crisis happened in US, we did not have that much of subprime in India, but still we saw the indices dropping, falling, collapsing, and all that. So on all these issues, any of these issues which has passed through maybe your literature in the part of research, or maybe as part of your studies in your content for BCom, MCom, wherever, anything which you would like to take, because Madam is available with us. Any questions? Anybody? Please raise your hand so that the organizers would bring the uh, a mic before you. So yeah, use this opportunity. Please, anybody need not be bothered whether what you're talking about is perfect, exactly correct, and all. Whatever you feel is to be shared can be talked. Also, those who are online, there somebody's there online. So those who are there online also, you can unmute and raise any of the questions that you would like Professor Kinnari, Madam, to answer on in the context or in the backdrop of what the presentation was on. Yeah. Anybody in the audience? This should be actually an interaction from your side. What are your thoughts on this? You would like to raise anything on the presentation? Yeah. Please raise your hands and then yeah. Yeah, please. You can just give the mic. You can just introduce yourself and then yeah, no problem.
Good morning, sir. Good morning, ma'am. I'm Mr. Zamir Ahmed from Commerce faculty. Uh, sir, Madam said that domestic people uh, have developed a habit of more savings, and you answered that at present savings are not required for the future generation.
No,
There, the answer has.
I didn't say that savings are not required for the future. Then don't mislead. I'll come back there. You give your question in
All
full.
right,
Yeah,
sir.
yeah.
And we got one genuine point from you that instead of focusing for the solutions, solutions will be done by the system or technology.
Yeah.
Rather than that, we have to do analysis and interpretation. Really very impressed with that point,
Yeah.
sir, what you suggested, analysis and interpretation.
Yeah.
And nowadays, a lot of fake apps and all coming, like we see most of advertisements to deal in the stock market and all. So what is the best way of analysis and interpretation to be done on those apps? Because most of students, they are getting huge losses by believing that apps are like true, and they started minimum savings. What they have done, they started investing in that, and finally those apps are very shortly it's going to be get closed. And how to analyze and interpret that,
You're
sir?
talking about investing in the apps, or
Yes,
you're
sir.
talking about general investments
Investing in
in
the
the
apps
apps.
and
Okay.
how to do that analysis and
Okay.
interpretations.
Okay. Yeah, this question has got three dimensions. I think one dimension is what Madam talked about in terms of culture of savings. Second is what I talked about, the shift in the culture. And the third is about the fraud and the interpretation and analysis part. Thank you for the question. And which is your institution?
So SDC Group of Institution from Bangalore, sir.
From Bangalore. Thank you so much. And thanks to your institution also for hosting you here. Thank
Thank
you
you
so
so
much.
much.
So,
Thank you so much, sir.
I'll first part is what when Madam was talking about. I think if I'm not mistaken, she can also correct me. She was saying that we have a culture of savings. That was what Indian tradition is, Indian ethos is, Indian value system is also talking about. Like when I earn something, I don't spend all that I earn. Something I keep aside, and I believe that this is going to address the future. Future will be uncertain. Anything can happen. I might have a health issue. I have to keep some money for the marriage of my daughter or the education of my son. So this is the culture of savings. And even otherwise, this is what I'm talking about, personal finance. Even otherwise, if I'm looking for return, I'm trying to have a culture of savings where I'm putting my money. I am not directly competent to decide the person who will invest. So I open a bank account or I take a mutual fund and I'm saying I hope that this will be safe with some return. And it is true also. Now that money also creates or also requires a robust financial market. Earlier, people were looking only at fixed deposits. If you look at the growth in the CD ratio kind of figures, like fixed deposit is what I knew. But today, the interest in gilt-edged securities is going up. The interest in government bonds is going up. So we have understood that there is something like a calculated risk which we can take within the risk appetite which we have. So that was what we are talking about, culture of savings. That is relevant. That is even relevant now. Savings will definitely happen, and savings is not that it must be in par with savings investment ratios. Healthy connections and association should be there. I was not speaking against it. What I was talking about in Kerala, I don't know whether you know that situation. Now we have started realizing because of the two factors which she said, Madam said. One was Size of the family is coming down. During my parents' time, I still remember my father and my mother saying, we are 12 children, 15 children. We could have one football team in one family. Father, mother, children together easily will make more than one team. So all that was possible. I have my brothers and sisters, we are five. Next generation. Now, if you look at the current generation, it is just two, one, something like that. So size of the family coming down. Earlier, we had one person earning. Now it is many families have two people earning. So the disposable income that you have on the individual is going. So we can spend more. Even when we could have spent more, we still had this burning culture, specifically in India, that even when I can spend more, let me be a bit concerned about, or let me be too much concerned about the future. So I'm still saving. So we went on saving, saving. That suddenly gave us a realization that for whom did we save? So that's what I'm talking about. That shift. We save for our children. And these children who migrated and went abroad have started showing some greater interest in that country than the home country. And they are not interested much in looking at where is your land, where is your building, what you did with your. They are saying that we are quite comfortable with the living that we have over there. So some of the parents have started understanding that let us not build everything on that. Let us also travel. Let us also look at tourism. Let us also look at making our lives itself meaningful with what we earn. And then the little still savings, let us have some savings. I'm not saying we need not have any savings. That is the reason why you look at the domestic tourism that has gone, it has gone up significantly. Look at the travel that has gone up, it has gone up significantly. Look at the healthcare systems which have gone up, it has gone up significantly because people have started giving more interest into all these factors. That is what I was finally referring to. Then your final concern, interpretation and analysis. I was talking about the skills in the learners. Why? During my time, recording, reporting was very important. You look at accounting, I still remember my days. Basic task in the class was journalize which to debit, which to credit, how to post, left side, right side, how to balance. And the major problem which students were facing, at least those who are in commerce, every day when we come to the class, first question, your balance sheet tallied? My balance sheet did not tally. Which side you put the account? Should you put this side or that side? So it was all what you call rotating or revolving round issues of recording, processing, preparing, classifying, all those things. These things are there now also, but currently these are all taken care by technology, your programming. So suppose I say that I know the rules of debit and credit. Debit what comes in, credit what goes out. I know how to post. I know how to do the ledger balance. I know how to prepare the balance sheet. I know how to prepare profit and loss account. I know how to compute ratios. I know how to compute NPV. If I say this to an industry, they'll say this is done by our software. Then what are you going to do? You are supposed to infer. I want you to infer from a profit and loss account. I don't want you to prepare profit and loss account. I want you to judge liquidity from ratios. I want to infer the difference that comes when NPV is something and profitability index is something. I want you to ascertain the impact of direct expense, something like that. The gap between GP and NP. Inference judgment is more important. So that is what I was referring to. Now, as you said, I think that is what was there in your mind when you're saying apps. Uh, I think Dr. Biju had a recent experience. We are talking, Madam was also talking about KYC. Many things are getting connected with KYC, getting connected with your Aadhaar, which is for a good purpose to prevent fraud and to see that you're putting your money in the right places, whether it is in apps or whether it is in games or whether it is in gamification, you're putting it in the right context. But there has been a misleading impact because Professor Biju was trying to talk about he went for a new loan application to a bank. He has never taken, there's no existing loan, but unfortunately, the bankers told him that he is not going to get a loan because his CIBIL score is very, very low. So he said, I don't have a loan. And he understood that his PAN account, without his knowledge, was linked with 6 loans through frauds. So such things can fraud in the sense that what happened is for fortunate. I don't know whether it is fortunate or unfortunate. His name is very short, Biju only. So this happens to be a very common name. So in his district where he resides, there are many Bijus. So some other Biju wanted money and they did not have a good PAN account. So they thought, let us look this Biju's account. So they tagged it and it went on in that form. So these things can happen. Now, what do you do with it? To certain extent, when you shift from artificial intelligence to generative intelligence, you can use technology itself to track it. And that's where I said you should ensure that there is not that much of what do you call penetration into a private space. But unfortunately, we don't have that culture in India. Say, for instance, I want a Aadhaar account, I want something. I immediately go to a photostat copy or a scanning center and give and say, I want a copy of this. They might take 2 copy. 1 copy is retained there. And we have some centers where large number of PAN accounts and Aadhaar numbers are available. So if you don't have one, you can go there and get somebody. And they'll say, my name is related to that. Fortunately for me, I have a very long name, so it's a bit difficult. My name is Gabriel Simon and Thattil. It's very difficult to get a second name in that category. So then his is very short. So if to prevent this, you need to have systems. The systems has to evolve. Systems has to evolve. But technology is supporting it. We cannot stop the system of KYC. We must embrace that and bring the unorganized, less organized people into that system and make it more corrective and formative with the other linking factors of technology, like appropriateness in names, the way you use your password. Now it is quite different. Say, for instance, earlier your spending used to be tracked only by OTP. Now it is tracked by OTP plus verification from your mobile. So one more step. Again, there are locking in which you can further lock it and then decide on that. If you lose your phone or if you lose your, if somebody is taking out your SIM, automatically the system now for financial market, I'm talking about financial market says all your apps using that particular number will be blocked. You can try if you want. You can just say I'm putting this SIM into another phone, or I'm just taking a SIM and making it say 3G to 4G. Then for 24 hours it is blocked. This is a protective measure because just to ensure that it is not stolen. So we are growing on that line. But the problem is when artificial intelligence and generate the same GI is being used by others who are what you call experts in that, they are also using it in the same form. We have to see how we can plug it. I think the market has got its own forensic. Now it is a big. We are also starting some research. There are lots of research in the police and in the market is coming out in this area how to plug it. But as you said, it is a matter of concern, and how much of that is happening requires data. Now it is being published also. How many accounts were defrauded? How many accounts were through encryption, how many accounts were funds were lost, how much digital transactions took place. Those things are happening. So that's what I would like to add. Anything which you would like to further add? Fine. So I hope, if not satisfied, at least partially satisfied, you got something. Okay, thank you. Anything else anybody wants to raise? Any more points to add based on the presentation? Anything which you not need not necessarily be a doubt, also supplement any of your interest, areas of interest which comes out of this? Anybody? Yeah, please. You who has got the mic? Yeah.
Sir, how can we?
You just introduce yourself
yeah.
and then yeah, so that everybody knows.
Prince J. Anthony,
Yeah.
assistant professor of this college.
Yeah, good.
Okay. How can we increase transparency of the financial market and capital
Okay.
market?
Okay.
Because do we have independent agency like Hindenburg or something?
So we are trying to to my understanding, we are trying to create systems of transparency through technology itself.
Yeah.
Say for example, what was my spending? If you ask me 20 years back, that was very difficult to understand. Today, if I can very easily through either my UPI or my credit card or my bank, because my money is coming only to the bank account. I'm not getting cash.
See, how can we ensure safety of investing?
That's what I'm saying. Safety can be ensured only when the payment points, receipt points are properly being tracked by a security system. That security system is being now ruptured into by certain people outside. We have to see that it has to get plugged. That's why I said we are growing from earlier one system, now OTP backed by second level security. That way it is going. So that is the only way in which you can get. You can also talk about like what you said, back kind of softwares which will plug the entire things. That's the only way we can do it. Yeah.
And do we have agencies like Hindenburg or something?
Right now, I'm not, because madam, you can, is there, do we have any, he's asking whether there's a, you're asking about a professional agency?
Yeah, yeah.
I'm not sure. I'm not sure whether you, because India does not, but we have forensic departments and security, cyber security divisions under SEBI and under RBI, which is looking into this.
But all for a ruling party or something.
What for?
All for a ruling party, biased. These parties
That
are
we have to
biased.
decide whether it's fully
Yeah,
biased or
yeah,
not
yeah.
biased. We can't, yeah. Anybody else who would like to further, if anybody knows better or would like to supplement to this, you can do to what he has actually raised. Yeah, please. Yeah, Dr. Biju.
So thank you, madam, and thank you, sir, for all the valuable inputs. Actually, thanks to the technology and AI, because we always talk about the low enrollment rate or participation in the stock market operations. But nowadays, we can see that whenever people travel in the train, instead of just looking the WhatsApp and Facebook, they are looking in the about the performance of their portfolio, and they are trading on the securities. But at the same time, we have plenty of rich people. They are not at all using even the ATM cards because of the security concerns and fear about that kind of things. That is what almost all the people are sharing here also. So that kind of things are there, and we are always as you said, we are always thinking about adding more security features and all. But at the same time, because of to ensure more speed in the servicing and all, we are removing all kinds of intermediaries. Even the CBDC I mentioned earlier is a kind of such thing where we are just trying to remove the intermediary, the intermediary play of the bank from that. Because of the intervention of bankers forum and all, it is now it is back. But how we can address this kind of an attitudinal issue, the fear factor, that is a major concern, sir.
See, that is true. See, when technology grows, very simple, whether it is in marketing, finance, or HR, when technology grows, intermediaries will come down. So that relationship will prevail. And you will have a more transparent system. You look at when you're talking about online booking of tickets, and you know when you booked, you know what amount you paid, you know the commission that was charged, you know the delay that was there, you know the time the transaction took place. So basically, transparency will do away with intermediaries. It's something like what happened in travel agencies earlier. Like you want a passport, you want a foreign ticket, you go to a travel agency. Today you can very easily do it online. So once you do your passport application, renewal, everything online, once you do take your ticket online for foreign travel, once you do many of your things which were conventionally done by agents, including your writing of documents, filing of returns, everything you do it, the intermediaries will be done away. Now, when you are trying to do away with them, their supportive factors will also obviously be a bit less. You will have to rely on your intellect, and you will have to do that. There will be, as Professor Biju rightly said, there will be an external entity. So I'm not very good in, suppose, tracking my savings, or I'm not able to understand what it means by NAV growth from this to this, or I'm not able to understand the meaning of yield to maturity. So my return, my portfolio, without an intermediary, it is telling me that I have earned these things, but I'm not able to judge something. So when I'm not able to do that, as again Madam was rightly pointing out in terms of financial literacy, I might again try to get this interpreted through an agency. Then there comes again the issue of security, because you have used somebody else. Because I'm not empowered. I'm not empowered to judge. In that process, there is some sharing. Because even if you look at fake information that is coming up, last week we had a series of phone calls coming to many teachers in our university, which was talking about their name correctly and their bank account also correctly. So two things were very clear. So what they did was they took from the university domain. The university finance department has a domain indicating name, designation, and bank accounts of all the staff. They got some data from there. Say, for example, the call that came to me is talking about my name, my designation, and saying that tagged to your bank account, there is a courier which has come, and we are calling from the customs department. In that courier, there is something which is an illegal smuggled product, and you are going to be responsible for this. And what they are saying is, for this getting freed, we are going to do it online, because now everything is online. And they will send a message. You have to put one, if it is this, two, if this, like that. And if you put on that number with that OTP, that you share that OTP that comes to you, they might have manipulated your bank account, or they might have made a purchase with your bank account. So the other party's client is asking for the ID, and that is what they're going to transmit. So such frauds will apply. So this, if I can understand and judge the implications, if I can understand the nature of that call, if I can understand the way that the website is different, I will be more careful. Otherwise, when I'm removing the intermediary, I am not getting myself empowered, then the third party fake will still be there. Now, in spite of that, what we can do is only go on adding the security features and trying to see that it is getting minimized. But fraud still will increase, because those who are this, what you call, fraud promoters, are doing their own research. How to break a website, how to get through a payment gateway, how to look at the balance that is prevailing, how to ascertain balance changes through marketing formats. They are also doing their research. So definitely these two things will grow side by side. But as you have rightly said, conclusively, doing away with intermediaries is going to promote transparency, reduce cost, and bring in more efficiency. But ability and empowerment to use it effectively with our human wisdom is something which should be supplemented, which should actually plug this fraudulent practices. That's what I have to add. Thank you. Anybody else wants to add something? Yeah, please.
So, ma'am talked about all about AI in capital
You
markets.
introduce yourself, and then we can, yeah.
My name is Alina. I am from Marubanis College, PG final year student,
Yeah, MCOM.
MCom.
Okay.
Ma'am added all about the AI capital market, all its scope, benefits. I would like to know more about its potential risk and challenges in of AI in capital market.
Challenges of AI in cap. Yeah. What I feel, I'll say what I feel. Uh, Basically, you're using artificial intelligence, and you're trying to promote that intelligence for big data analysis. Big data analysis. Suppose I'm saying accounts. I can take data, and I can manually, what I can manually do, maybe for say 50 or 500 accounts. This will do for 50,000, 5 lakh, 5 million accounts. It will do that analytics, and it will map that data. Now, there is always likely to be unnecessarily, or what you call, incentivized promotion for products and services. Because earlier, when you have AI, you clearly have the pathway of who has how much income. The data is marked. The data is marked in the sense that everybody gets income through the bank account, everybody spends from the bank account. So as a whole, you know what all things people spend. What is the earlier, when I was referring to travel and tourism, it suddenly they saw that the amount that is being spent through travel agencies and foreign travel is going up. So immediately they started incentivizing that. You give some incentives for hotel stay, you give some incentives for foreign tours. So it is required, it is essential, and it has to be kept at an optimum level. Otherwise, I might consume products and services just because of the incentive. I'm only looking at this. That is happening because AI is able to gauge your preference. So you suppose I am involved terribly in games, or I am involved in crime thrillers, which are maybe novels or films or whatever. So I'm going on searching on that. Maybe artificial intelligence will tell you more and more of games, more and more of books, more and more of literature, and you might get prone to the extent where something which was positive turns out to become negative subsequently. AI did not do that. AI tried to promote the market and sales, but there is a chance of being excessively consumeristic. Human wisdom must be supplemented with AI. That means you must say enough is enough at some stage. If that is not there, you will become a victim of technology. So AI should not make you a victim of technology, but AI can map pathways and guide you to the right path. You can also use AI to understand global opportunities of education. You can use AI for potential results that can come up from analysis in different fields for your research. That's all good. But the same AI is telling you, when even when you had not thought about something, why not you do this? What are the benefits of this? And you are, because of the incentive, you are driven to action. That is a situation where suddenly you forget your human wisdom and you try to look at the artificial. That is why people, you might have seen some crimes being committed where people look at films and movies into, as I said, thrillers, and finally they decide, let me launch something like this. Let me do something which is suicidal on that line. So market will give you funds. Market will tell you products are there. Market will tell you options are there. Human wisdom should say what is best for me. I must set the borderline. So human wisdom is not something which we can do away with. We cannot live exactly as a machine. Machine, if you give it input, it will give you output. But how to use that output, when to use that output is human wisdom. Artificial intelligence will scan and generative intelligence will tell you how the market is growing, where the returns are best, where the risk is less, how to analyze products. Use it with wisdom. Use it the way it can. The same artificial intelligence will tell you, why don't you consume more and more on these lines, because there are some trends in that, and you should not be a victim of that where you fall with all the savings that you have. Your artificial intelligence will tell you that your savings is growing at this rate. Your artificial intelligence might also tell you that, why are you putting the savings there? Why don't you put it here? But I must use which is correct and which is wrong at a point of time. Clear? Thank you. Yes, please.
So my name is Jaren Jose.
Yeah.
I am a research scholar at this department, SB College.
Yeah.
Commerce department.
Yeah.
Sir and ma'am, first of all, thank you. Your session and the moderation was very insightful. I have one question connected to the previous question asked. So you said the AI should not replace the generative wisdom, human wisdom. So there are a lot of people here who would like to know about more job opportunities in the growing financial sector, and what skills would our youth have to focus to achieve
Very
these
good.
job
Very good.
opportunities?
Two questions. What are the numerous opportunities which are coming up in the financial sector? And what are the skills which are skills? I think earlier to his question, I've already answered. Skill shift is happening. Skill shift is basically from my skill when I did my BCom was preparing journal account, preparing balance sheet, preparing trial balance, preparing cost sheet. My skill at that time was at the level of information, recording data, classifying data, getting, so it's all at the level of information. I gather information, I gather data, I prepare statements, I present statements, I compute values. That is a skill set at that point of time. Today, the skill set shift is we don't require that much of skill in gathering and recording information. We require skills at the level of knowledge and wisdom. That is what is the answer to what she also said. Information, tons and tons of information will be ready. Even within seconds, you can get 15 or 20 or 150 balance sheets and profit and loss account. You give all your data, it can be prepared into statements. You can get ratios out of it. You can get your cash flows out of it. All that preparation, they don't have. It is not very, it does not require higher order skill. But what is this indicating? What is this trend telling? And this data inputs are coming in plenty in publications. I'll just give you one information. Just to few, I think 1 week back, Business Line is recording that the number of people who file returns with an income above 1 crore has increased significantly. They're giving some lakh figure, it has crossed this year. Now, this can mean different things to different people. Those who are in FMCG, those who are in the food industry, those who are in the health industry. It indicates, as she rightly said, how incomes are growing and how that growing income is coming to the tax net. So it is indicative. Now, how do you infer this? How do you interpret this? How do you take advantage of this? How do you transform this into an opportunity? This is where your skill is. So, skill is basically inferential into knowledge. That means the earlier skill was how to create information. Today's skill is how to infer and use information appropriately. This is the question to the part on skill set. Then another question is, what are the opportunities that come up in the financial sector? The financial sector actually requires people who can integrate what I earlier said as the skills with the technological support, the techno innovative support, which is a big gap which we are now facing in commerce. That's why I said engineering taking over. The problem here is financial market in portfolio management, they require financial modeling softwares. Financial modeling and portfolio creation, your portfolio creation and security analysis is learned by students in commerce. But the market today does not require a person who knows CAPM technical analysis, who knows the different Markowitz model alone. It is required. They need to have people who know it. But they need to have people who can use this theory in a technology driven format, and they can create something like, as you said, a portfolio management, wealth management software for that, which we don't have. So opportunities will come in the financial market when technology and theory that we learn get integrated. Accounting, you look at accounting. In accounting, we are very good in preparation. We know all the accounting systems, corporate accounting, advanced corporate accounting. We all have that. But the problem is now we are talking about AI in accounting. We are talking about accounting inferential softwares, which perhaps I might not know. I'm very frankly, I'm telling you, I do not know. And the reason is that now I'm not required in the accounting advanced market, because though my accounting skills are good, the skill sets are not using technology. This is there in every field. I'm not saying it's only confined to commerce. It's there in all the domain. But in commerce, this becomes very relevant. That means the changing situation in the financial market is demanding. That is why two things I keep telling my researchers in finance: be very strong in data analytics, be very strong in modeling and econometrics, where technology is being used in a big way. If you do that, sky is the limit for you. In Kerala University, we have a student in economics. She was actually doing a master's in economics. She had some of these skills. She used to come for consultation to commerce in terms of security analysis. Then she did her financial modeling program with technology backup, and she became the research head of a SEBI team. So if you work on that line, it is very easily possible. But unfortunately, we stand a bit segmented. I'm only bothered about when I'm doing PhD or when I'm only bothered about the theoretical part. I'm not looking at the other side of it. Same, the market requires a lot of people who do behavioral analysis. That is where your behavioral finance come, who can understand bias, who can look at psychometric behavior in terms of financial products. But unfortunately, we are not very strong in psychology. So I must integrate that discipline, psychology, with my finance and try to have models where it can apply in the market. Then you are sought after. So, what is the end lesson? The end lesson is that you cannot survive just in one capsule. You cannot just survive by being in one segment. Almost all disciplines are like that. I have to have the innovative model. I have to look at how the futuristic pathway is coming with technology. I have to look at the change and integrate. Then you are sought after. It is true in all sector. It is very much true in financial market. That is why in you look again in example, you look at IIMs, you will see all those who go for finance in IIMs, preliminary test is testing on statistical and data analytical capability and building models. So finance masters or a fellow program or a diploma program in finance from IIMs with an engineering backdrop, because both is integrated now. Technology, innovation, as well as application with inferential skills, you are very much sought after. I think this addresses what you wanted to get from me. Thank you. Yeah. So
Now we are concluding the Q&A session. due to time limit. Thank you, sir. And once again, thank you, Professor Dr. Kinneri Thakur, for leading such an insightful and engaging session. Your expertise and guidance have made the session very truly valuable, and we are grateful for your time and your contribution. Thank you, ma'am. Now, let me welcome Professor Dr. Gabriel Simon as to give a token of love to Professor Dr. Kinneri Thakur. Thank you. Now, let me welcome Mr. Jaran, Research Scholar of Commerce Department, for vote of thanks.
Good afternoon, everyone. Firstly, I thank God Almighty for blessing us with the day. Um, I would like to extend my heartfelt gratitude to the organizers of this national conference, hosted by the Research and Post Graduation Department of SB College, Commerce, SB College, and the Indian Accounting Association, Kerala branch. Thank you. Um, we are grateful for being blessed with Professor Kinneri Thakur, sorry, ma'am, as the chief guest of this conference, especially for her insights regarding the potential of Indian financial sector in the global context. Ma'am, your insights has motivated the researchers, the teachers, the entrepreneurs and investors and the citizens in us. Thank you, ma'am. We were also blessed with Professor Gabriel Simon Tuttle, sir. Your insights and well articulated moderation of this session was valuable and inspiring for all of us. Thank you, sir. I remain.
Thank you. And it is the end of the morning section.